makes a profitable forex trading strategy? This is Chris Matthews from TradeForexFundamentally.com. In the last post, we covered what it takes to become a profitable trader. One of the essential elements of success is having a profitable trading strategy. This is a very competitive market, and contrary to popular opinion, you can't just follow trends. You must have a real trading edge. And finding a good forex trading strategy is not easy, especially when there are so many options. So how do you tell what will give you a real edge in this market? I found that a successful forex trading strategy must consist of the following key elements. One, it must be based on how the market actually works rather than some statistical pattern that one may expect to repeat itself with time. Two, it must adapt to the market. Too many trading strategies are very static in nature, but the market is always changing, so your strategy needs to change along with the market. Three, it must have a positive expectancy. People place too much emphasis on how high the win rate of the strategy is, but you don't have to have a high win rate if your losses are very small in relation to the size of your wins, and vice versa. Four, it must have a method for identifying opportunities and when to enter. And conversely, it must have a method for identifying risk and when to exit. The strategy must also have a systematic way of determining how much money to risk per trade depending on the account size. And one of the most important, it must allow you to bet more when the odds are in your favor. That will give you the best chance of succeeding in the long run. Many forex trading strategies will meet some or most of these characteristics, but if you really want to be successful over the long run, you need all of these. There were times in the past where I was fooled by the results that certain trading strategies had in the past, but failed to see that they were based on past patterns and the strategy couldn't adapt to changing market environments, for example. So you need to consider each one of these when evaluating whether you should use a particular strategy that either you came up with or it's one that you obtained from somebody else. Next, there are as many types of forex trading strategies, I like to say, as there are varieties of pasta in Italy. Here are some terms that you should be aware of when you're looking at these different types of strategies and you're trying to narrow it down into the type of strategy that you would like to pursue. There are technical analysis methods and fundamental analysis methods. Before you enter the market, you must have a way of analyzing the current market environment before you're ready to enter a trade to buy or sell, for example. And this may consist of technical analysis, which is basically observing past price patterns by looking at charts, indicators, and support and resistance levels. You can go ahead and Google these terms if you're not familiar with them. Or fundamental analysis. And this is observing the current macroeconomic environment and determining how politics and economic data between two countries affects the current exchange rate. And this is also known as global macro trading, and it's where such traders as George Soros and Jim Rogers achieved their fame and riches. And you will have to decide what type of analysis, or maybe even both, you would like to pursue. Each has its own set of advantages and disadvantages, so I prefer to combine both myself into a method I call behavioral analysis. Next, you may have heard of news trading. Forex is a relatively chaotic and unpredictable market. However, at the time of scheduled economic news or data releases, the market tends to react predictably if there's an extremely positive or negative surprise in that data compared to what traders and economists and analysts had anticipated in the market. This game of news trading is all about being fast and riding the really quick move following the news release, even seconds after the release, for a very short period. If you want to go down this route, I talk about news trading a little bit, but it's not my specialty in my trading. Some traders that are very good at this and are kind of famous for trading are Henry Liu, Rob Booker, and Tom Yeomans. Quantitative trading is not so popular in the retail trading world, so you may or may not have heard of it, but it's immensely popular in the institutional trading world. I mean, with banks and hedge funds and so on. And these institutions have the collective manpower and brain power and low cost of transactions due to their business relationships, and also access to state-of-the-art communications and computing power to make these strategies possible. Forex quant trading usually consists of really complicated mathematical algorithms that intend to exploit inefficiencies in one market or between markets for a profit. If you're interested in pursuing this route, recognize that it's not for the faint of heart. It is possible to do quant trading. I've seen other people do it, but it's not very easy. And you can get a nice introduction by Googling this topic or going to Wikipedia, for example, and then following that up with books on how to build a quant trading system or something like that. You may have also heard the term forex robots or bots or EAs, which stands for expert advisors, and these are software programs that can be loaded onto a compatible forex broker platform and will trade automatically on your behalf. What it does, it monitors the market in real time and creates entry and exit signals either based on technical analysis or the quantitative style strategies that we just discussed above. And it implements that into its computing system and then comes out with an entry or exit signal, and hopefully you'll do a profit. I would not recommend using these bots or expert advisors, especially starting out, because it's not as simple as just buying it and then watching the money come in. The vendors who sell these systems often won't tell you what's in the formulas that they use for obvious reasons. I mean, they don't want everyone knowing their strategies. And for that reason, you don't know how to judge the system very well. If you're going to go down this route and find a good robot or EA, be very careful, do your due diligence, and really look into what kind of strategies they're using to see if it makes sense. In fact, you should ask yourself if they meet the key elements that we discussed a couple minutes ago. All right, for your next steps, you should consider which one of these types of forex trading strategies really appeals to you and start finding out who is trading them successfully and just learn from them. That's the fastest way that you're going to make money in this business, is to learn from someone else directly so that you avoid a lot of costly mistakes. On the blog at tradeforexfundamentally.com, I will focus on trading forex using fundamentals, as the name implies, and also a little bit of technicals, and blended together I include, and by blending these together, I have a form of analysis I call behavioral analysis, based on how the market works and how the humans who are making the decisions in this market are thinking. And I'll share lessons on this periodically. I've really focused on designing this strategy to meet all of the key requirements above, and it served many traders well. So please go visit the blog at tradeforexfundamentally.com if you're interested in trading fundamentally with a blend of technical